joining us. This is Admiral Markets in the live webinar here with the live webinar, the Trading Room live webinar. Before we actually start though, this disclaimer explaining that this webinar is intended for a global audience and it may not be suitable for all attendees. To check that and make sure it is available or watchable for you, take a look at admiralmarketsglobal.com to get also more information on conditions and other details. Trading for exchange and global financial markets is also considered high risk and it may not be suitable for all investors and traders. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here, and you can always ask for the disclaimer by sending an email to Admiral Markets or checking, of course, the admiralmarketsglobal.com website. I thank you for your attention. With that said, we can move on to today's topic, moving averages. And maybe not the most popular tool. I'm not sure, actually. It will be actually quite a fun idea if I think about it. Rank your most favorite indicator or tool. I would be curious how the moving average rates. No idea. I mean, I think it's great, but I do think that if I look at attendees at least, pivot points and trend lines seem to be more popular or more interesting for people to join at least, let me say it this way, but it's not a very scientific measurement, so I don't know. But it would be interesting to find out. Let us know, let me know what's your favorite tool. I'm just curious. Moving averages is definitely, if I probably had to choose one, it would be definitely in the top 3. It's difficult for me to choose exactly one, to be honest, because I like fractals, I like pivot points too, and trend lines, and also oscillators, so that's probably the top 5, I guess. But yeah, we'll be using moving averages for defining the trend, looking for opportunities, checking filters, establishing triggers, and deciding entries. And if by any chance you are visiting the first or second time or third time this particular webinar, or maybe the first time that you're joining us with the moving average webinar, please let me know through the chat. All right, let's take a look at Admiral Markets and social media because it's quite useful. You get an update when analysis and wave analysis and technical is released. So, and for instance, Nenet's setups that he uses, for instance, I think are tweeted as well. So take a look. Now, yesterday, of course, we had FOMC, and they released the committee released a statement, and the statement basically was saying, I mean, roughly, quickly said, watch out, don't exaggerate with how fast we could expect interest rates to increase. Okay, fine, the quantitative easing might stop, but just because we say an interest rate hike could be within a considerable time doesn't mean it has to be tomorrow, right? Doesn't have to be within a few months, doesn't even have to be next year, right? Whereas the market maybe was kind of already had a certain time frame in mind. The FOMC was saying, well, be careful with that time frame. It's really dependent on data, with some even being a bit scared of worsening of the global economy and the impact the dollar could have on it. So, well, that was the statement. And the market, as you can see, went up. The euro dollar went up at least. The Dow went up. So there was a dollar weakness based on that, which is logical. We had obviously also already about a 1,600 pip fall, 1,550 fall, so on the euro dollar. So some retracement at some point is logical, and I think that the FOMC probably gave that good cause to do that, I guess. But anyhow, that's what I read about it. Today, pound interest rate, ECB Draghi speaking, and that's about it. Aussie had a negative, bad employment change, so that's why the Aussie probably didn't do all too well. But those things definitely want to be cautious of. Let's see, Bob says, moving averages, pivots, and trend lines. Well, we're almost like identical twins here. That's cool. Yeah, totally agree. Awesome stuff. I was looking at the pound CAD, and when we use moving averages, we see something, and trend lines for that matter, we see something interesting. So we can continue along that line. And before I move into the majors, I was just, we were looking at this not so long ago, and I was thinking of a bounce here, remember? That did happen, but price didn't really move far after this break. It actually broke the trend line and started to move down. So that break of the trend line could be something interesting to keep an eye on, because we have bearishly aligned moving averages. In the meantime, it was a good, of course, a good fall as well here. This could be a hook back in the first break after that fall. So this could be a fall, hook back, break. So that looks interesting. Maybe we'll see some CAD strength. I don't know, but it looks like pound CAD is set up for a continuation fall. That's at least what I was analyzing when just before our webinar started. And we see several options. Price could, for instance, go back to the weekly pivot. That would be an interesting level here if it gets back to 180.50. And this resistance, the weekly pivot and daily R2, for instance, could be something interesting. But maybe it doesn't get that high or far. Yeah, high maybe. So even a trend line like this, for instance, right there you can see the break. So, excuse me. So besides those trend lines, we also have price below the daily, monthly, but more importantly, maybe because, at least for this webinar, because we're looking at moving averages, is the fact that on the 4-hour chart, this could be the first breakout on the 4-hour chart. You see bearish 21 below the 89. So if price breaks below the fractals, it could be the breakout point for a bit of a swing maybe. Maybe intraday trade, depends trader to trader. But you can see the price also has popped below the 21 daily band as well. And it's bearishly aligned, although not much angle to it. But so this is how you can use moving averages. Moving averages in general you can use in a ton of ways. You can use it as support and resistance, obviously. You can use them as a trend. You can use them as momentum to see what the angle is of the moving averages, to see how fast price is moving. You can use them as a back to the mean idea, or back to the mean, back to the average idea or concept, where if price is far from the moving averages, there's a chance, of course, that price will get back to it. Look at here, price is far, price gets back to the moving averages. You could even use them for strategy purposes that are more specifically focused on, for instance, entries. Right? For instance, here, when moving averages are aligned and price has gone back to the moving averages and then closed below it, that is one way of treating moving averages. But you need to be more certain that there is a trend and not some range, because then, of course, the value is not there. So they're really very useful in many purposes. We'll probably dip into all of these purposes at one point or another, but I'll try to also focus on the trading side of things, obviously. What I like to add, besides the moving averages, are trend lines indeed, and pivot points, just like Bob says, because it gives a bit more reference. But I use also other discretionary things, but these do help because moving averages are great, but yeah, what are the intraday levels? It's sometimes useful to know what kind of movement we could still expect, because the thing with moving averages is that they are good support and resistance, but when price is below them and it's trending, let's say it's trending away from the moving averages, how far could price go? How far could we expect price to last? So pivot points are then useful to get kind of boundaries of what traders could expect and what kind of price movements they could expect within today's range or this week's range. All right, now of course, just because we could always zoom out to a time frame and find a time frame where we find a moving average that is below it. Let's say, let me give you an example. Here you can see, for instance, prices below the daily, prices below the 4 hour, and below the 1 hour. So price on 3 time frames is below moving averages. All right, so that means that we have nothing below it. How do we know what the target is? That's the disadvantage of moving averages, because we have everything, all prices is below it. So what would be support? Trend lines have the advantage that, or trend channels have the advantage that you have a support and resistance. You could zoom out to the weekly, and you see here's the 89. So that's probably the target on the weekly chart. Price could fall down to that 89. But it's not so practical for intraday trading. So pivot points help with that point. And we see an L3 here, and that could be the breakout spot. Price below that could be an interesting breakout on the pound CAD. Let's take a look at the pound maybe to see what's happening with the pound, but this looks interesting, pound CAD. Alrighty, wait, this is the euro, sorry. Let's see, what kind of moving averages? I like to use 21 or 34 in combination with an 89 or 144. Now at the moment I'm using 21 and 89, and the 21 has an open high and close. So you have 3 moving averages, and the 3 moving averages I like this. Why do I like it? Because it leaves more of a footprint on the chart. You can see the angle more clearly, and generally gives a wider zone of where support or resistance could be. Whereas one moving average is 1 point on the chart, but often enough price doesn't stop at that 1 point. It's more like an area where price could stop. So if you look at the zone that the 21 EMA band provides, you see that price stops at various of those moving averages, sometimes above it as well. And because it gives a zone rather than one specific spot, I like the visual appearance more. I think it gives more realistic information as well, because I don't think one particular moving average is that, let's say, special that it would necessarily, price would necessarily stop at that spot. I think it's more of a confluence zone where multiple things come together. Not only moving averages, but maybe at that day, at that particular spot, here on the pound dollar, there was maybe a pivot point and maybe a fib as well, and that's why it stopped there. But it also stopped relatively close to the 21 band. So it's not that I think that the 21 band is that special that it really has magical powers to stop price, but I do think that on average, most of price stops roughly around that. And it's a rough, good indication, and that's why I like that footprint more than a specific spot. Now, if we look at pound dollar, it actually broke to the upside. So we're seeing some CAD strength as well, because pound is moving up against the dollar, but not against the CAD. So maybe we could take a look at the dollar CAD. Because dollar CAD could maybe move lower faster. Well, why? Because if we have if the pound is not making much upside against the CAD, but it is against the dollar, that means that maybe this dollar CAD, the dollar is weak, CAD is strong, so maybe the dollar CAD is better. Let's see. The dollar CAD was in an uptrend, but if we use moving average, if we use trend lines, excuse me, we see that we did break out of that support. Now the moving averages are not, at least on the 4 hour, are not yet bearishly aligned, but that's because of the 89. If we take the 89 away, you do see that price is below the 21. So it's kind of in this mixed zone. It's the 4 hour chart, I call it like the neutral zone, where whereas it's still below the 21, but above the 89. And that's always a tough spot because it can go either way. Here, for instance, here, price was below the 21, but the 89 was still below the 21, right? And still we got the bounce indeed. So I wouldn't necessarily rule out any shorts. 1 hour is definitely bearishly aligned. For intraday trading, the 1 hour is most important, by the way, not for daily, because then we get into too high of a time frame. The 50-minute chart, definitely also very bearish. So I think that's the most important. In that regard, it looks like indeed, yeah, indeed good observation. Let's see, it is definitely a bear flag or a rectangle maybe. So good job, Justinas. I hope I say your name right. And this looks like a breakout, but we have L3 pretty close, and I like those flags right at the L3 or close to it. This is about 15 pips away, so which makes it a bit awkward for me. And I either, let me say this way, I either like it a bit further away from the L3 when it's maybe halfway at least, or a bit closer to the H3 if you get a zone like that, or right at the L3. So I'll probably wait and see how this break manifests itself instead of jumping in it right away. But I do think it's good to put on the watch list. Pound dollar though, back to the pound dollar, it broke the trend line, this trend line, and we got bullish moving averages in the meantime. FOMC, as I said yesterday, sparked a rally to the upside, and what was looking like a break here didn't turn out to be one. And yesterday, of course, I was looking for downside because of that trendline break and because of the moving averages being bearishly aligned on the 15 at least here. I don't think that maybe the market was ready at that point just because the market just paused and went into neutral and went into sideways the whole day. So anyone who joined me, unfortunately, we didn't get the profit there. I exited for a small loss of, how much was it? Because I moved my stop loss above this top, right? So it was about 62. It was probably, if I remember correctly, 14 pips, which is still very little compared to the 70 and 80, sorry, 70 or 80, 90, 100, 50, 60 pips that can be made with winners, so that's okay. Price eventually, let's see, after this moved down, kind of just went like a heartbeat. And then FOMC was the providing factor for the upside. So it was just a quiet day. One of those days that, unfortunately, you might as well just skip because of the FOMC in retrospect. It didn't move anywhere. The Aussie went a bit deeper, all the way to the 78.6 fib. As I said, it's possible it could retrace that deep. But if it does, I was going to exit upon the retracement, which I did. So I got out for zero. But this one actually did move down. It just retraced a bit deeper. And then we also got the spike because of FOMC. But it did reach at least the minus 272 target. So, but as I said, I didn't want to stay in if it would go deeper. So I did exit. But if you hanged in there, then it did reach at least one of the targets. But it was a quiet day. So that was yesterday. Anyhow, your dollar. Sorry, we were at pound dollar. I'm crisscrossing here too much. Let's see, pound dollar. So we're in basically bullish territory, to be honest, obviously because of this breakout on the euro, on the pound, on the AUD. We're all in dollar weakness retracements / breakouts. So it's a question of finding the best one, I guess, because we're all still within the H3, L3 zone. But the sentiment here after the breakout should be at least one more time up today. Euro dollar has reached the H3. The pound dollar has reached, was close to the H3. So with bullish moving averages like this, it looks like for upside. But if I look at the euro dollar and pound dollar, you see some difference there because the euro moving averages are more bullish. Let's take a quick sneak peek at euro pound, which is indeed moving up. So, and above H3. So it looks like the euro dollar probably would be a better long. So I would like to see price hit H3, which it just did. I would like to see a fractal at H3, which it still has to do. And then I would like to see a break of that. I think that could be a good entry. How much potential of upside is remaining, I don't know. It's difficult to estimate. It could be not too much, unfortunately. That could be one of the concerning parts about a breakout if I think about it. I might skip the euro dollar. I mean, technically speaking, this is what I'm looking for. But if I look at the higher time frames, it is also an uptrend, but there seems to be so much confluence of resistance. Daily R1, weekly R2, minus 618, monthly pivot point. Technically, it totally subscribes to what I would be looking for. From a discretionary point of view, if I look at the hourly, it looks scary to go long right in front of those resistances. So I would probably skip it. Let's see if maybe there's another dollar that's better. Funny enough, by the way, I don't do it often. I had a pending order on the euro dollar on 2 accounts. One account got filled, but I had that long 2 pips higher. I put this one 2 pips lower. And it just missed me. Look at that price, just missed. And I left it on because I just wanted to show you. I was, of course, annoyed, but it was just like a pip or yeah, really a pip. Where I had the other account, I had it 2 pips higher, and it did get hit. And I had the TP right here at the red line. And that was also a pretty precise level because that's exactly where price stopped yesterday. So I was really like, what, when I looked at the chart, I was like, ooh, that was actually a pretty nice, setup, but just missed. Anyhow, let's see if there's some other dollars to look at. Dollar Swiss is moving down too. Looks better, in fact, if I think about it. Less support close by. Dollar Swiss looks better. Let's take a look at dollar yen. That looks maybe better too, because of the fact that price is already below the L3. In fact, this is already a breakout. It's already underway. We have plenty of space down to the 38.2 fib. We're below the pivots. This seems to have less resistance. So the dollar yen looks better to me. L5 as the target because that's exactly where the 38.2 fib is. Which is probably the 38.2 fib, which could be a bouncing spot and a potential area of at 107, which definitely could be a spot where the uptrend, the bigger uptrend resumes, by the way, potentially at least. So that's something to think about, the 38.2 fib here, this one, at 107.06. That could be a big swing point after this uptrend could be a moment where it continues, but we never know it. But something I'm keeping an eye on. The intraday, however, this one looks the best almost, together with the dollar Swiss because it broke this trend line already. It's below the L3. In fact, in that regard, the dollar yen could already have had a breakout below L3 here. Let's put fibs on this downside. Okay, we're close to a target, so we'll probably get another bounce. So if we put a fib on the next swing high, swing low, let's see. I would say a move up to the 50 would be a good resistance spot. 107.98, stop loss 108.35. It looks interesting. Maybe the 50 fib is a bit too ambitious, but let's put a fib on this smaller downside here. 50 fib, hit the target. And hit another target. So let's put both fibs on, the last one and the bigger one. Maybe the 38.2 at 107.90 is more realistic. Okay, so I'll put a pending order there. Try it, see how it works. See, the difference with dollar Swissy is the fact that it's already below L3. But both don't seem to have very big support or resistance in front of it. Let me refresh this Aussie, see if that has something similar. Obviously, also here making higher highs and higher lows, it is also above H3, so it does look similar as the dollar yen and dollar Swissy. So it looks like these are stronger. Let's take a look maybe at some crosses to see, like for instance, Bob mentioned pound odd, for instance, to see maybe the crosses could be interesting too, because if indeed the odd is strengthening, like the yen, the pound yen and pound odd could be moving down, as we see here. So those could be interesting as well. Not the dollar necessarily, but these crosses. And indeed, pound yen is on hourly still in a downtrend, in fact. 15 is very close to getting that crossover. So in that regard, this looks like a potential for downside. I like this. I think I'll still wait a bit because price is already shot down from the middle of the H3, L3 zone right down to L4. So I'll let this consolidate. I'll let this retrace. At one point, it's going to happen. I'll let this AO go back to the zero line. Let it do something like this, and then look at a long in the area by a short at the L3 long area. As soon as this gets to the zero line, the 50-minute chart doesn't have to get to the zero line. It just go halfway and then continue. But the 5 minutes should. So definitely very high on the list, pound yen, downside. But I'm waiting a bit. But that looks good. Looks like a good momentum fall. So all I want to see is a bit of a correction. It might not happen, and if not, then tough luck. But that's what I want to see. Otherwise, it's I would rather see a bit of a discount, get a bit of better entry, but it is in a position of a very good position regarding a trade here. It has everything that I want to see. Ideally, 1 hour downtrend, price not any significant major confluence of support or resistance that could block it, and price making momentum to the downside, important, and breaking through the Camarilla levels, now just waiting for basically some discount. And a small retracement on the small time frame, that's all. Alrighty. Pound odd. Let's see. Pound odd is the same, in fact. It too is in a downtrend, although a bit choppier recently. Right at the L4-2. So that does look similar as the pound yen. This one has momentum too. Is at the L4. Let's take a look at the hourly. I don't see any necessarily big difference here with the pound yen. Let's take a look at the odd yen though to see what's going on. The odd yen did make a move up, in fact. A bit more Aussie strength, which would mean that pound odd is probably slightly better. But to be honest, we're right in the smack in the middle of the H3L3, so it's difficult to tell. Let me take a look at the hourly, see if we get more info there. That's difficult. Doesn't seem like a big winner here. Maybe taking both pound odd and pound yen makes sense because it's really difficult to say. If anything, the odd yen is at a resistance. It's at the weekly R1. It's at the top of that zone. So maybe the Aussie strength has run its course here and the yen could take over. So it could be better to take the pound yen maybe. But that's a tough one, as you can see, because the price is so in equilibrium between the odd and the yen. Both look good. So dollar yen, pound odd are interesting. But one thing though, we have pound interest rate. So that's something you have to be aware of. Maybe you don't trade it with the pound interest rate, because definitely with the pound interest rate, the market could go quite quiet on the pound, and who knows what happens with the interest rate. So it's high risk. Euro yen, let's see. Bit of a mess here at the moment. Is maybe bearish too. I don't see much momentum at the moment, but it is at the L3. Price is below the 21 band. So but I don't see the difference here with the pound yen is made a nice clear fall here. I like that. That's momentum. To me, this euro yen is kind of like choppy like this, and it's not the same. I mean, if price, I would need to see price first bounce, break through L3, and then bounce, and then I'll be interested in trading it here. Break, hook back like the pound yen, and then down. Now it's not momentum at the moment, so I'd rather wait. Pound yen seems to be one step further, one stage more advanced. You can get the Camarilla, by the way. Dan just sent me an email with a quick reminder. Like, for instance, please send me Camarilla, and I can send that to you and anyone who would like that. And the email that I have is in the chat there. Let's see. So dollar Swiss C, dollar yen at the moment, and Aussie, dollar, pound yen, pound odd are in vision, and later on maybe euro yen. and dollar CAD. Okay. Let's see. We have to do some work to see which ones of those seem the best. Dollar yen seems the best, and pound yen at the moment because the price is already below L3. Euro doesn't look interesting, too choppy. Kiwi looks pretty interesting. Definitely a very strong spike up, like the Aussie, but has a monthly pivot point pretty close by. That's the difference. So if we have so much choice, it would make sense to eliminate some of them if there's support and resistance close by. Pound CAD got a bounce indeed. So let's see. Let me think for a second here. Dollar CAD. Let's take a look at the odd CAD. Let's take a look at some of the crosses to see which one could be better. The odd CAD and the odd Swiss. Alrighty, odd Swiss. Let's take a look. Messy. We broke out of this upside, then actually rebounded very quickly, then went down, and then rebounded again. Looks very messy, stuck between the monthly and the weekly here at the moment. But I think this is more of a weakness, a head and shoulders potential than anything. So it looks more like Swiss strength, I would say. So that means dollar Swissy looks better than odd USD. If I had to choose, see odd CAD. Odd CAD is breaking to the upside, which means that we're seeing more odd strength, which means odd USD would be better again than dollar CAD. And if we compare CAD versus Swissy, I don't have it here. Then we cannot do it. Let's see, odd CAD. So our conclusion was odd CAD is moving up. That means odd is better, stronger than the CAD. So dollar CAD is out then. And Swiss looks better than the Aussie. So dollar Swissy then looks good. How about the Swiss yen? Sorry for this many crosses. Here it is, Swiss yen. To me, it looks more like an impulse followed by bull flag. So would imply more Swiss strength than yen. So dollar Swiss looks a bit better than dollar yen, in fact. Looks like dollar Swiss is the winner. All right, so maybe that one is better than. Let's see. We'd like to see a fractal here first at the bottom. Oh, Björn has some info here. If I look at my strength indicator, yen is gaining most strength of all, looking at daily last 20 days. Yeah, got it. So according to Björn, the yen is the best. So that's good because we were focusing on that one. pound yen and the dollar yen, but the Swissy doesn't look too bad. Probably number 3 I would say is euro odd. Target I would aim for the L5 and the 38.2 fib at 107. 107.10ish here, 107, 107.7, 107.12. Probably exit just a bit before that, 107.20. Which is about 70 pips then. So let's see. Maybe, there are many factors still that could happen. But that would be the idea. I think that, you don't know if the price will make that fall right now, but that would be my main target for the moment. But it does depend how price reacts. If it moves choppily, I might move the stop loss, trail stop loss. If it makes a good sprint like this up and falls a lot like this but doesn't hit my TP, I actually might move my TP down maybe because I could put a fib on this and aim for lower. But considering the stronger daily support I consider here at 38.2, I don't think there's anything wrong with actually exiting probably at that level, to be honest. Okay, so there was a bit of a puzzle to look at all these different crosses, but it was, I think, useful to look which dollar's weakness pair would be the best, and we came probably to the conclusion that dollar Swiss and dollar yen are the better ones, and the cross is pound yen, pound odd probably at the moment. Although euro yen seems to be a contender as well under certain circumstances. So we could make that conclusion when looking at not only moving averages but looking at pivot points and trend lines. Yeah, the FOMC definitely sparked some interesting price movements after a very, very quiet day, unfortunately, which just shows and proves to show that sometimes those markets really just go nowhere and totally go dead on a day like that. And then when a day like that happens, you of course think like, oh, why did I even bother that day, because it just didn't go anywhere. But today could be different. Now it's just a question of waiting and keeping an eye on things, I guess. Waiting for pound yen to make that retracement. I hope it does. And if it doesn't, well then tough luck. I'm waiting for the AO to go back to the zero line here. You can do the same thing on the dollar yen. Let's see. Although no guarantee it could get back to be honest, to that retracement level. I have a sell at 107.90, but we don't know if price will get there. But keep an eye on it. It looks like, to me, it's not as strong of an impulse as the pound yen here to the downside. If you put a fib on this very first correction, let's see, 107.83 is a minus 618 target. That could be maybe a more realistic entry, but I'll keep it there for the moment. There's a doji last 15 minutes, which means that we could probably see a bit of retracement. Don't forget that the market always likes to, it's always a question, of course, of What is the most logical at this spot? Is it most logical to go down here at this point? I don't know. That's probably not, I think. You never know. But it looks like we probably see a bounce first and down. Although on a 50-minute chart it is difficult to say. It's the same like the dollar, euro dollar. On Monday I had although I was very bearish on the euro dollar, obviously, I had serious doubts that the euro dollar could move lower. Why? Because it was at a spot that more downside didn't seem logical. If you look at, for instance, this trend channel, and you look on Monday where price was, Friday, excuse me, what would be the most logical thing for price to do at that spot? Now logic is not always a good maybe reason, and it's sometimes difficult to estimate, but I mean, you know what I mean. At this spot, would anyone go short? What is the chances of price indeed pushing through that level? Probably not too high. It's possible, but the path of least resistance is probably not down, but probably a bounce. What kind of a bounce, though? It could have been a bear flag and then follow through. But no, we actually got a very impulsive bounce. And as I said, there is the chance that then if you see something like that, it could become an impulse, a zigzag. And it did become a zigzag. It just took some time. We had about 1.5 days of mess here within that zigzag, which always makes it difficult and messy to trade in those 1.5 days. But it did become, as we expected, a zigzag. It's just not as easy to capitalize on it, and but that's what I was really thinking when it was here. Not only thinking, but I wrote about it actually. So I have proof. I'm just joking, but it's true though. But anyhow, back to my point. Now I got a bit distracted here with the path of least resistance. That's what I was talking about. But we were talking, yeah. So the dollar yen. What's the path of least resistance on the dollar yen? I don't know. Could be down indeed, as it's doing now, but according to my strategy, at least, I want price to either break L3 and enter, or if it's below it, I want to see a retracement before taking it. So in that regard, it's quite a simple choice. So this is also part of the job, is just waiting for, obviously, for things to materialize and things to set up, and having the patience for that, which could be sometimes demanding. I mean, to have the patience to wait, but better than chasing the market or jumping in most of the time in the long run. Any questions as we wait for these things to bounce and break? Probably, the whole process is not going to be completed before we probably finish the trading room. That's just shows how, although 1.5 hours or 1 to 1.5 hours webinar seems long, it's actually, even on a 50-minute time frame, it's really very short before things kind of build up to a point that they match whatever the strategy wants us to see. That process just takes time. So if you have any questions, now would be the time. We can take a look maybe at others. In the meantime, let's see. What did gold do? I'm kind of curious. Yep, continues spiral gold to the upside indeed here. Nothing very overly drastic, but it's over to 1225. Silver, let's see, even less of a rebound, but moving up 2. Let's see, Pound New Zealand. This looks interesting. Let's take a look at Pound New Zealand. Probably the same as Pound Odd, I would say. Yes, bearish trend. Look, price below the moving averages. Big consolidation, now breaking below it again. We're breaking below the moving averages and breaking below this trend line. This trend line can be drawn on multiple ways. All of them have broken. So that was a contracting triangle like this. Price is below it now on the hourly 15-minute chart 2 at the L4. So this looks like a continuation. Although the only thing I don't like about it is that here is the momentum and this is a choppy kind of like falling wedge on a 5. So that's a bit different than the Aussie. Pound odd, excuse me. Look, on a 5-minute chart we're seeing this pattern. Maybe not a pattern, maybe more of a channel, but there is some slant in the lower line compared to the upper line. A bit. Maybe not as drastic as I thought, but very slight, but there's really not that much in fact. Well, anyhow, still, I mean, there is momentum here. So that's the only thing. When that happens, sometimes you see a spike up to H3 before moving down again. So that makes it a bit more dubious. Let's take a look at Pound Odd again. I would like to see price back to L3 here too. But this could be difficult to see because of the fact that price has already bounced off L3. So that moment could be gone, to be honest, because we broke below L3, went back to L3. That's what I'm looking for, right? That happens, so we would need a double top again. I don't know. That doesn't seem too likely, in fact. The moment could be over here. On New Zealand is quite a big range, and we see the Aussie bouncing. So that means the Pound Odd could also have a bit more, let's say, spunk to it than or space than the Pound New Zealand. Because if the Pound Odd is indeed, if the Odd New Zealand is relatively at the bottom of this zone, which is occurring after a big impulse, then upside on the Odd New Zealand seems the most likely, I would say. So Pound Odd looks therefore a bit better than Pound New Zealand. Aussie looks a bit better than the Kiwi, etc. So we'll skip to Pound New Zealand. Looked interesting, but concluded that that's actually not as interesting. But Pound Odd could have left the station. If it did, if it does push through L4, I might change gears and then instead of waiting for L3, put a fib from here to here and wait for a hook back maybe to 61.8 to this broken bottom here, for instance. That would still not be too bad at 108.22. But only if it pushes through L4, wait for L4, wait for a hook back to the 618 and then down to the minus 618 target and L5, something like that. That would be could be the backup plan basically if price doesn't get there again. Could be the backup plan for the pound yen too. But to be honest, even if it doesn't bounce now, then I would still keep the fib from here to wherever it stops let's say it pushes a little lower and goes to here, below the L4. I still think that then probably anywhere 50, 61.8. It doesn't have to be L3 exactly because it pushed lower. So still would use this fib to whenever and wherever it stops. For the moment it's here, but could be lower. Yeah, pound New Zealand. I would for this particular 15-minute chart, I would also, because of that reason, skip indeed. So that's a good question, Marcio. So even if I would see a setup, I would probably skip it on this 50-minute chart. I think pound New Zealand would only make sense if because of the spread for maybe a 4-hour, a similar setup, but for 4-hour trading. Because the philosophy could be just as valid for higher time frames, although then I wouldn't use Camarilla, but I would use pivot points. So good question. Anyone else have questions maybe? Dalian, doesn't look like we got the hook back to the desired level. Not for the moment at least. I might be inclined maybe to now move that entry order a bit lower, right at the L3 instead of a bit above it, because price is now moving lower. And as price moves lower, the moving average zone, the 21 band, goes lower. So the likelihood of price going higher is less, and therefore more inclined to put that entry order just a bit lower, maybe right at this L3 level, where we have a couple of bottoms too. The euro dollar, yeah, definitely upswing, uptrend. The only thing I don't like about it, I mean, technically this is a break right now, I would say, of the H3. I just filtered it out because of the fact that it's so close to the monthly pivot point, weekly R2, daily R1, and also very close to the minus 618 target of the very first zigzag, the very first part of the zigzag, and therefore said, okay, that's too uncomfortable for me. But an uptrend it is, certainly. But is it interesting for me right now? No. But could it? It could, of course, exceed my expectations, but I would rather skip it. But it is definitely an uptrend at the moment on the short and medium term, because we're having this zigzag with higher highs, higher lows. But in the long-term long-term perspective, it's still a downtrend. Short, medium up, long-term it's still down. Why? Because we don't have any higher highs or lower lows. Sorry, higher highs or higher lows. We still have lower lows or lower highs. All this upside is still within. It could just still be a lower high for more downside. And if I put a fib on this swing high, swing low, because we didn't retrace anything, this is still one swing high, swing low. We could be retracing now this swing high, swing low, which means that we could have this could be only one zigzag, and we get one more down, and we get a bigger zigzag up to the 38.2 fib, which then we see a follow through to the downside. That's what I'm expecting at the moment. We had a very good downtrend, especially a very strong move here, very strong impulse of no retracement, and we might be retracing this swing high, swing low. But because it's such an impulse, I'm expecting follow through on that. What is the most likely turning spot for such a big down move? The 23.6 or 38.2. 23.6, price is 12 pips away from there. So that means that besides the pivot points we saw here and the target, there's also 23.6. So another reason why price could have a headache there, could have a headache. So I'd rather skip that euro dollar. But the main level, I think, is the 38.2 fib. First of all, there's a resistance spot. There's also 130 psychological number. So price up, price hitting 23.6, roughly, at 128, making a down move here, making an up move here, and then hitting that 38.2, this, and then falling down to 120, 120, 170, 117.50, I think, is in the cards. So let's see, if price breaks above 38.2, then things look a bit differently, especially if it breaks above 130. Obviously, then my bearish analysis probably is flying out of the window, but at least as price stays below 130, I just see this as a medium / short-term uptrend, but a long-term retracement indeed for more downside. Let's see. It's not that bad indeed, pound New Zealand. It is not a pair I trade this strategy often, as far as I remember. Somehow I keep an eye on the others, as other 10 or 12, as you notice, not that often at the pound New Zealand, but it's not that bad indeed. So that's good to know. Are you talking, Marcia, are you talking about pound New Zealand, or are you talking about euro dollar? Okay. Let's see. Euro dollar 4-hour chart. In 4-hour, is there just a correction? Yeah, to me this looks like a correction indeed. But such a big correction that you could already consider it an uptrend now, to be honest. Maybe not an uptrend, but at least an upswing. The thing is that they're still worth trading because there's so much space to the upside. Plus, we never know. At the moment, this seems like a logical resistance, but will it really be a resistance? How about if it breaks through? We don't want to, skip all that trading below it in this upswing necessarily. But it seems like a correction indeed. There is a daily pivot point, yes, exactly. But there's also other things. There are a lot of things. There's a daily R1, a weekly R2, a monthly pivot point. There is a minus 618 target, and there is the 23.6 fib of this entire downside. So there's no, there isn't. Where's that? Sorry. No, sorry, I got the fib wrong here. Excuse me. And a 23.6 fib. So there's really, such high density of resistance that indeed that probably will stop the up move, and we'll see a bounce and then a continuation like that. But it's never a guarantee. But with such a confluence, certainly wouldn't want to go long right in front of that. But sometimes you never know. Short-term momentum can push price further than we think and expect, even if there's a cluster of support and resistance sometimes. Still not a guarantee, but certainly enough confidence for me to not to be careful here. But I don't think that's it, personally. There's too much of an upswing, but So I'm expecting a higher retracement up to 129.50. Unless price starts to move down and breaks below the band, and I see some clear impulse here, and I see a bear flag up like that, then of course the entire situation is different, and we're more in a bearish mode again, definitely. And we might not get up to the 38.2. Then I would, of course, readjust my analysis. If we make more of a bear flag like this and then start to break, then we are probably heading up to the 38.2 fib. So at each point, a new piece of the puzzle is revealed to us, which of course will impact the odds and probabilities that we assign and assess of each path of least resistance, each potential. At least if you like the discretionary analysis. Alrighty, folks. Let's see. What would you mind have a look at dollar yen 4-hour chart? No? Let's take a look. No problem. Let's see. Yeah, to me, the dollar yen is a good question because it is definitely a lot of momentum now to the downside. So it's a risky thing to say it could stop at the 38.2 fib, which is 106.80. Or depending on how you fib it, 107.10. So it was a very strong, powerful momentum up, obviously riding on the dollar. However, we failed to break and continue here and broke the bottom as well, the blue spot, which means that we don't have a triangle potential anymore. What could have happened as well is something like this. That is out of the window now. So we are definitely in the bearish sentiment because we broke this bottom with a good zigzag swing. And we are actually had this zigzag 50 fib, and we could probably be heading towards the minus 272 target, which is aligned with the 38.2 fib at the daily, weekly S2. That could be a bouncing spot. So it looks bearish, certainly until that point. But we never know. Price could extend further down there. And my analysis that the price could bounce here could be wrong. It could definitely, the short-term pressure could just push this further down than expected. But my expectations at this moment, nonetheless, are 107, 107.20, 106.80 at the max. If it pushes below 106.80, then we're really breaking through a 38.2 fib, and then dollar yen is not as bullish as I think it is still in the long term. But in the short term, medium term, like the euro dollar, it is indeed making a bearish trend. So on those time frames, short, medium, it's downtrend. Long term, this could be a retracement. Key level 106.80, 107.20, because that's where the long-term trend, uptrend, has to continue. Otherwise, something else is going on here. Marcio is saying need to break the previous resistance 107.37. Let's see, 107. You mean previous support? 107.37 is below price at the moment. So I think you mean support, probably. 107.37 it cannot be resistance because price is above it. Resistance is above price, and blue is price. Resistance is above it, and support is below it. And 107.37 is below price, so it could be support. Or do you mean this resistance here? Maybe this top you mean. From the past, old resistance, broken resistance maybe. Ah, okay. Yeah, that's possible. In my opinion, that level is just part of the zone though. In my opinion, this entire zone is support. So if it breaks 107.37, it's not necessarily in a downtrend as yet, because that entire blue zone here, let me mark it differently, is a support zone. So anywhere between 106.80 and 107.40 is a support. So this entire zone here, that zone right there, that green zone. So when it breaks 107.30, it's only the top of the zone. It will really need to break below 106.80, this bottom basically, before this momentum, I think, is not as bullish as it seems. So, but we are thinking the same, indeed. Good. Let's see. A bounce from. I'm just including this level as well, this bottom. That's all. Let's see. A bounce from Camarilla L4. Yeah, that definitely does happen often indeed. An L4 bounce. I hope so, because then it could bounce to my entry and then fall. That's what I'm hoping for. L4 bounce up to L3 down to L5. That would be ideal. If not, then I'll have to say adieu. And I missed the moment of the L3 breakout. Usually speaking, there is a hook back. Not always. Well, folks, thank you so much for joining me, and I hope that this webinar helped. We'll be back tonight. Let's see. Tonight we're going to take a look, at the magic of using candlestick patterns in chart patterns at 6 p.m. European time. That's 5 p.m. UK time. 4 p.m. GMT time. And so I hope to see you then. I think it's going to be interesting. We're going to be combining two patterns. I think two patterns that are well suited for each other. So I hope to see you then. And in the meantime, wish you good trading and see you all soon. Cheers.